Welcome to Business with Louis, the show where we dive into the world of entrepreneurship and explore the concepts, strategies, and stories that can help you succeed. Today, we're going to talk about one of the most fundamental and fascinating topics in business: how the stock market works. As a business owner or aspiring entrepreneur, understanding how the stock market operates is crucial for making informed decisions about your investments, managing risk, and growing your wealth. So, let's start with the basics. What is the stock market, and why is it important? The stock market is essentially a platform where companies raise capital by issuing shares of stock to the public, and investors buy and sell those shares in hopes of earning a profit. It's a vital component of modern economies as it allows companies to access funding for growth and expansion, while also providing individuals with opportunities to invest in businesses they believe. The origin of the stock market dates back to the 17th century, when the first joint stock company, the Dutch East India Company, was formed. Since then, the stock market has evolved significantly, with the establishment of formal exchanges like the New York Stock Exchange and the NASDAQ. Today, the stock market is a global network of buyers and sellers with trillions of dollars in daily transactions. One key concept is supply and demand. The price of a stock is determined by the balance between the number of shares available for sale and the number of buyers willing to purchase them. When demand exceeds supply, prices tend to rise, and when supply outstrips demand, prices tend to fall. Another important principle is risk management. Investing in the stock market involves taking on some level of risk, as there are no guarantees of return. However, by diversifying your portfolio across different asset classes, sectors, and geographies, you can reduce your exposure to any one particular stock or market. Influential thinkers like Benjamin Graham, Warren Buffett, and Peter Lynch have all contributed to our understanding of how the stock market works. Their ideas on value investing, long-term perspective, and business fundamentals have inspired generations of investors and entrepreneurs. Let's look at some real-world examples that demonstrate how the stock market works in action. Take Apple, for instance. When Apple went public in 1980, its initial public offering raised $110 million. Today, Apple is one of the world's most valuable companies, with a market capitalization of over $2 trillion. Investors who bought Apple shares early on have seen tremendous returns, but those who invested during the dot-com bubble or during periods of high volatility may have experienced significant losses. Another example is Amazon. When Amazon went public in 1997, its IPO raised $54 million. Today, Amazon is a dominant player in e-commerce, cloud computing, and artificial intelligence, with a market capitalization of over $1 trillion. Investors who believed in Amazon's vision and business model have been rewarded handsomely, while those who doubted the company's prospects may have missed out on significant gains. First, it's essential to have a long-term perspective. Investing in the stock market is a marathon, not a sprint. It's crucial to focus on quality companies with strong fundamentals rather than trying to time the market or make quick profits. Second, diversification is key. Spread your investments across different asset classes, sectors, and geographies to reduce risk and increase potential returns. Consider working with a financial advisor or broker who can provide personalized advice and guidance. Third, educate yourself about personal finance and investing. There are many online resources, books, and courses available that can help you learn more about the stock market and how to navigate. Take advantage of tax-advantaged accounts like 401, IRA, and brokerage accounts to save for retirement or other long-term goals. Finally, don't forget about dollar-cost averaging, which involves investing a fixed amount of money at regular intervals, regardless of the market's performance. This strategy can help you smooth out market volatility and avoid making emotional decisions based on short-term fluctuation. In conclusion, understanding how the stock market works is critical for anyone who wants to succeed in business or investing. By grasping the core principles and theories that underlie the stock market, you can potentially earn higher returns on your investments and achieve your long-term financial goals. As Warren Buffett once said, price is what you pay. Value is what you get. So, do your research, be patient, and always keep a long-term perspective in mind. That's it for today's Business with Louis. Be sure to like, share, and subscribe. And remember, every great business starts with action. Make your next move count.